So a knee-jerk reaction a lot of people have when they see something like the Iran war cause the price of oil to go up is to say we're the most vulnerable places to that and to bang on them the most. So you parse the world and you get a simple reality that the United States is not as vulnerable because the United States is the largest oil producer in the world and an oil exporter. But Europe is more dependent on oil importation. So in theory, people would say it should be more sensitive. It should react more on the downside. Then you say, but is that the place that should react the most? Well, is Europe the place that's the most sensitive? No, because Europe actually has European oil production. Europe has natural gas, primarily the Netherlands. But there's the North Sea oil fields, and it's a free market world, and they're no more dependent than a lot of other countries. The places that are the most dependent are the places that have no oil at all, import everything. And this, of course, principally and famously would be Japan and South Korea. In Asia, those have been hit harder. Europe has not been hit harder. Europe's measurably, depending on what you're looking at inside Europe, holding parallel to the United States in this drop in this time period. Let me put that to you slightly differently. Year to date, the United States is down a little bit more than Europe is. You can see that by looking at the All World. You can see that by looking at the MSCI Europe. You can see that by looking at MSCI EFA. The fact of the matter is, in a year where the dollar has risen a little bit, but just a little bit, against European currencies, the change in the value of the European markets relative to the U.S. markets tends to show that Europe has not been overly sensitive to this. It is still true that year to date, Europe is doing better than America. Again, not every country, not all the same, but overall and on average on a cap-weighted basis. That's not so true for those Asian countries, those few that are 100% dependent on imports. And that's the part of the world that's actually been the most sensitive. Thank you for listening to me. Hi, this is Ken Fisher. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.